Hello and welcome to the latest insurance asset management video. I'm Adam Cadle, editor of the brand, and here with me today is HSBC Asset Management's Head of Capital Solutions, Borja Azpilicueta, and Head of Insurance Business, Deepak Sibaram. So firstly, Borja, could you provide an overview of Capital Solutions and how it sits within the alternatives business?
Of course. Capital Solutions is a new business unit created about a couple of years ago to provide institutional and wealth investors access to proprietary deal flow originated by the bank. It leverages on HSBC origination and underwrite track record, but it provides additional asset selection and alignment of interest. And we are focused on scale verticals where HSBC has got a proven track record and what we think is an attractive investment opportunity.
And could you explain the strategies in place, for example, revolving credit facilities and NAV finance?
Of course. I will start with revolving credit facilities, if I may, or RCFs. RCFs are senior secured variable rate loans provided to corporates to cover the operational liquidity needs. And this role is very important because that makes RCFs very strong in terms of credit profile through the cycle. As an asset class, it's a high yielding, short duration private credit with very little exposure to base rate movements. The role providing operational liquidity makes them also historically very resilient from a credit perspective. In terms of deployment, we think it's a attractive space where about 50 billion will be required for the next 3 years, and there's a very good opportunity for private credit to play alongside bank and non-banking lenders.
And for NAV finance?
NAV finance is a type of senior loan secured by fund investments. It's typically provided to private equity funds, managers, and fund investors. And as an asset class, is a senior secure loan with very strong protection that can achieve independent investment grade rating provided by agencies. It provides a high yielding investment grade credit within 3 to 4 year maturity. And from a deployment opportunity, there's a structural opportunity in the market as private equity hold periods are extended and managers need to continue creating value either through bolt-ons or supporting portfolio companies. And we estimate conservatively that during the next 2-3 years we're going to be facing about 50 billion of financing needs, where again private credit can play a very important role alongside bank and other lenders.
And turning to you, Deepak, what are some of the features that make these asset classes attractive to insurers?
Thank you, Adam. When you think about direct alternatives, has proven to be attractive for insurance companies for many reasons, but some of them are diversification, risk-adjusted return, and relative value return compared to other assets. Now, when you look at RCF itself, it comes with some structural benefit when you look at it, right? So both from a capital perspective and from an accounting perspective. So on the capital side, these facilities are drawn on average about 20%. And each of these RCFs can be in between 1 month to 6 months, so relatively short duration, despite the fact that the commitment can go out to 6 years, right? So you take these components into account, it's relatively low on the capital side. Now, it also benefits from an accounting perspective, mainly because of the short duration features, and also it's very inclined not to have a mark-to-market movement.
Sure. And for NAV finance?
So NAV finance comes with some beneficial treatment as well for insurance companies, given that it has low LTV. There is a cross-collateralization benefit as well. And of course, like Borja mentioned earlier, NAV can have investment grade benefit as well. Now, the duration of NAV can be short duration, in between 3 to 5 years, and they get repaid. So the weighted average life is likely to be shorter.
And Borja, what are your aims and ambitions for the Capital Solutions offering going forward?
We have created 2 scalable verticals, and we're going to continue providing investors with access to attractive asset classes. We have 2 main areas of focus. One is continue expanding our existing leverage credit capabilities, and the second is provide access to adjacent, attractive investment grade private credit verticals.
Borja, Deepak, thanks for your time today.
Thank you very much.
Thank you.